All right, chat. You guys are in for some fun. Welcome to the stream. First things first, Robinhood has already made it so that people cannot trade their Gamestop options. Take a quick peek right here, and it is painfully obvious that GME has made it so that you cannot buy these GameStop options. The GME $125 calls for 29 cents cannot be purchased. Of course, you can see at the bottom it says very clearly, you can close out your position in this option, but you can't buy additional contracts. Right there, clear as day. You see the little buttons, the little green buttons? It says roll position and sell position. You cannot click view all options or buy. It is plain as day. Robinhood playing games as usual, robbing the hood. It's in the name, ladies. It's not a bug. It is a feature. Remember that. It is not a bug. It is a feature. What's going on, Typo? Zachary, Bilbo, Jason, Marianne, Nicholas. I see a lot of founders of Lit Exchange right here, right now, early adopters, and that's beautiful to see. If you guys don't know what it is, you need to go check it out, because there has never been and there will never be another opportunity like this. UBS is exposed to over $500 million in losses. Before I get to that, I want to say Stocks or Poker here in the chat says it's the same shit on Webull. That meaning that you cannot buy the GME 1 call options. And it looks like Bilbo said, has that on my brokers today. They're calling them GME 1 for those I already had. And in case you guys are unaware, the GME 1 options are options contracts that are adjusted to account for the warrant. All right, but that doesn't mean that they should be unavailable. They should be available already. Nicholas says, wow, these guys truly hate the potential of retail investors making significant money. I think I completely agree with you on that, my friend. Patty is here, says, damn proud founder, LFG. Let's go, my friend. Let's go. I did notice that Lawrence says, I purchased a GME 1 today for January, $40 strike, and I got a great price. I used a large broker not called Hood. As you can see, more reputable brokers are allowing you to buy them as well. UBS here, in case you guys are unaware, is holding a ton of toxic derivatives through legacy costs, ladies and gentlemen. These legacy costs are leftover toxic derivatives, basically ticking time bombs that they inherited when they purchased Credit Suisse. And Credit Suisse obviously went insolvent because of the same toxic derivatives that they inherited from Archegos, the family office. Archegos, the family office, went insolvent due to their short positions in stocks like GameStop and AMC through the use of bullet swaps, toxic derivatives, all the way down the line. And the thing that happens is these do not just disappear. When one goes down, the toxicity goes up the chain. Think of it like poison, and it spreads all throughout. The family office over-leveraged and was destroyed. That was Archegos. Then that means that the next person up the chain, the next firm up the chain, Credit Suisse, is the one that had to pay for it. Credit Suisse went insolvent and burned up into nothingness and was purchased by UBS for literal pennies on the dollar. Pennies. UBS, as a matter of fact, didn't even want to buy them. The only way they agreed to buy them was if the Swiss government agreed to give them an $8 billion bailout when those toxic derivatives explode. This is a fact. You can Google it. Don't take my word for it. Just check out Google, ask your favorite AI. So UBS received a signed agreement from the Swiss government stating that when those toxic derivatives explode, they will receive up to $8 billion from them in exchange for buying Credit Suisse. Now, as you can see, not only are they still holding that bag of toxic derivatives, they have just been exposed to $500 million more in a bankruptcy. UBS Hedge Fund Solutions is the largest unsecured creditor with a $233 million claim for providing financing for First Brands. And their bankruptcy is now leaving a $500 million exposure to many firms, UBS being number one, the top dog. That's going to take over $250 million in losses. That's billion with a B. Now, another hedge fund business that UBS recently agreed to sell has a similar claim amounting to another $116 million more. And a UBS asset management firm has secured claims for more than $160 million on there as well. All day, let's go ahead and turn it down. All right, folks, I went ahead and turned down the microphone for you. You can let me know if it's still not sounding as crisp as it should be. I did recently use a new cord here. I am still adjusting the settings. We have turned down the gain. We have adjusted the noise filters, but I have a feeling that it is this cable that is causing issues. If it does not get any better or any more crisp, I will be replacing it after this stream so that the next stream is better. Stockin says, Lit Exchange founder here. If you want change against corruption, step up and be a part of it. Give me my buy button and give me a lit market. And I completely agree with that, folks. Because you can buy and hold for as long as you want. But the fact of the matter is that that's not going to make any actual difference at the end of the day until these firms are forced to act differently. Thank you, Stephen. I appreciate that. And how will they act differently? Well, my friends, when Lit Exchange starts sending tons of your orders, all of your orders, to lit markets, to lit exchanges, and taking thousands, then millions, then billions of shares out of the dark pools, they will have fewer shares to manipulate. They will have less ability to short stocks with your shares. They will have fewer ability to naked short these stocks and rehypothecate your shares and lend them out without your permission. In case you didn't know, Apex Clearing and Webull have both been smashed by regulators on multiple occasions now for lending out your shares without your permission. So that means not just Webull, but any firm that is using Apex Clearing, such as Webull, Public, etc., all of those firms, Schwab, eToro, they route to Apex Clearing. Apex Clearing front runs trades and also lends out shares without your permission, even if you're not signed up for margin, even if you're not signed up for share lending. Thank you, CD. I appreciate it, my friend, but I'm in the middle of a stream. It'll have to be later. So again, check this out here. Again, we have ComputerShare now on this weekend of October 4th and 5th with scheduled maintenance notifications in which all applications and websites will be down. They claim that the countries and regions affected are going to be the UK, Ireland, the Channel Islands, continental Europe, South Africa, and Hong Kong for Saturday, October 4th and Sunday, October 5th. This is something that they do every year. And I wonder if quite possibly Ryan Cohen and the teams at Gamestop and BBBY are issuing their warrants today for the purposes of knowing that to coincide, I should say, not for the purpose, but to coincide with this scheduled maintenance that has occurred every year for the last 4 years as well. And you know what, Carlton? I've got to completely agree with you, my friend. People seriously need to stop buying GME on Robinhood. And you know what the problem is, though? That all these criminal brokerages are using payment for order flow. Every single one of them, including Public, including Schwab, and Fidelity, and Webull, and Robinhood. That means that your trades can be front run by the likes of Virtue Financial, by the likes of Citadel, and all the other market makers that are out there. Taking your trades, holding them for up to a month, processing them in dark pools, issuing synthetic shares into your account, artificially diluting the stock. That means dropping the stock price with shares that shouldn't exist, and then failing to deliver when the time comes to actually deliver those shares. It is a consistent, serious problem. And we do have a shelf offering, okay? There's been paperwork here filed. This is Form S3 registration statement from Gamestop. Now, this does not mean that people will guaranteed that Gamestop is going to issue shares right now. But this form does mention a mixed shelf offering with the possibility of them issuing shares. That means if GameStop does begin to moon or does go to the moon, they would have the ability to offer shares. As of now, no dilution or shares have been announced and has not occurred as of the filing date. You take a look at the two screens on my right here with XRT borrow fee, cost to borrow, and GME borrow fee as well. We are looking at 0 available shares on GMEU. GMEU is a manipulating stock ETF. It is what is called a single stock ETF. Folks, think about what I'm saying here. What is a single stock exchange traded fund? It's an ETF that holds shares of the stock, only one stock. But if they put the shares in that ETF and then short it, it does not show up as short interest in the stock itself, the underlying stock of GameStop, GME ticker. So there are shares of GME in this ETF GMEU. No, Maynard, this is a new offering. This is just filed. Form S3 was just filed today, my friend. There are shares of GME in GMEU. There are shares of GME in XRT. Okay, and when those are shorted, it does not reflect as short interest on GME stock at all, even though there is short interest on the underlying assets. Do you understand what I'm saying? If you don't understand what I'm saying, I will explain it to a Labrador, as if I'm talking to a golden retriever. Short interest higher than reported. The short interest is much higher than the actual reported short interest of GME. Aside from using exchange traded funds, of which there are 0 shares available to borrow, and of which is not reflected in the short interest of GameStop, firms can also short using derivatives like swaps, the same swaps that destroyed Archegos, that up the ladder destroyed Credit Suisse, and that up the ladder are still being held in majority by UBS, who inherited those legacy costs. The same UBS that demanded an $8 billion bailout from the Swiss government when they took over Credit Suisse, for the purposes of taking over Credit Suisse, knowing that when these derivatives explode, that they're going to need billions and billions of dollars to pay retail investors for their long positions in stocks like GameStop and AMC. Lawrence says, boss, got a math question. How many more calls exist over puts on GME? Each contract is going to need 10 warrants to make them complete. That's not a question I can answer right now because I don't have all that pulled up, my friend. It would take me a long time to do, and I'm going to lose the chat if we go into that. But basically, for every share of GameStop that exists, there should be, for every 10 shares of GME that exist, there should be 1 warrant. Now, from what I've calculated in the past, we're talking over 40 to 50 million warrants that should be issued. The reality is that they may need significantly more to account for all the synthetic shares that are actually out there, all the failures to deliver. And that's probably why there are 0 shares available to borrow. That's probably why Robinhood is not allowing people to buy contracts of GME1. That's probably why Webull is not allowing people to buy contracts of GME1. Because they are still over-leveraged. And they were over-leveraged way back in January of 2021 when they removed the buy button the first time. Paulo, the coming warrants are being issued today. That means with T1 settlement, they will settle in everyone's accounts on Monday. Monday. Now, taking a look at my screen, this is regarding the prospectus of the S3 offering. Here is the actual S3 offering. And in short, here's an article that says, GameStop shares fall 2% Friday after filing shelf registration, raising dilution concerns. And of course, this is an article on robbing the hood, the shitty-ass brokerage that's, for some strange reason, people like to use, even though there's not even a single number next to the charts. So it's really just a line indicative of absolutely nothing. But I understand there are many people out there that are simpletons, and I guess I don't blame them. Every time that GME files a prospectus, there's headlines being pushed by companies like Seeking Alpha, like Robinhood, like MarketWatch, that fears dilution. This could potentially be a line drawn in the sand by GameStop against shorts. We have seen this happen time and time again. And a shelf registration does not automatically mean that dilution is going to occur. It is pre-approval to raise funds in the future in different ways. And nothing is going to happen automatically, and nothing is going to happen unless management decides to move forward with it. But now we've got warrants and options and shares all coming together into a perfect storm. GameStop is sitting on billions and billions and billions of dollars in cash on hand. They are a profitable company. And in the same basket of stocks, like GameStop, sit a few other very magical, highly shorted, massive short squeeze potential companies like BBBY, like AMC, like COS, and so on. And we have seen not once, twice, 5, 6, 7 times now, 10 times or more in the last 5 years, that these stocks move separately. But anytime one of them has a massive price movement to the upside, the others follow, whether it's AMC first in June of 2021 or GameStop first in January of 2021 or BBY or COS, etc. Because there are so many swaps and derivatives held within the same baskets, all packaged together. When we have short covering and failures to deliver being closed out and delta hedging of positions occurring by the market makers and the shorts and the broker dealers and forced closeouts by the broker dealers in order to ensure that they can cover their own asses. It's not just one stock that goes. It's 2, 3, 4, 20, 50, 80 stocks that move all at the same time. Again, that's why in January 2021, you saw the silver ETF SLV forced to move upwards. And become position close only. That's why you've seen AMC at the same time, Gamestop at the same time, COS at the same time, NWBO, SNDL, Sundial, TLRY, Tilray, many different stocks. To the point where Robinhood and Webull and Schwab and eToro and E-Trade and so on and so forth all had to prevent you from buying the stocks. But they continue to let their short hedge funds buy the stock. Why? Because Robinhood and these firms do not consider you their clients. They do not consider you their customers. You are the product. And their clients are firms the likes of Citadel, the likes of Wolverine, the likes of Susquehanna, State Street, Jane Street, Virtue. You are the product. And commission-free trades are not free. You're paying more in hidden fees than if you would just pay an upfront commission. But again, it's kind of one of those like, hear no evil, see no evil, speak no evil kind of situations. If I don't see the fee and I don't hear the fee, then I shouldn't complain about the fee. But it's there. And it is incredibly bad. So much so that the Securities Exchange Commission has sued Robinhood time and time again, and of course won, for lying to you about how they make money. This isn't something that's happened just once or twice. But people continue to use Robinhood even though they've screwed you over multiple times. They agree to pay $65 million, of course, without admitting guilt. For what exactly? Robinhood provided inferior trade prices that cost customers $34.1 million, even after taking into consideration the savings from not paying a commission. The SEC said Robinhood provided misleading information to customers about the true costs to trade with the firm. Because it's commission-free, your execution quality is so bad, that means that you're selling for such a terrible price and you're buying at such an inflated price so that they can bake in their profits. So much so that you literally lost $34 million more than if you had just paid a few pennies up front. Think about that. This is who we're dealing with, folks. Let me go ahead and adjust that for you so you can see. And in case you're unaware, you can see on my screen very clearly right here. Oh, actually, you can't see it so clearly because I have it too far down. But take a look at this. Look what's going on Schwab right this very moment. On Schwab, the maintenance fee to short GameStop is 300%, folks. So anybody that wants, it's so volatile and so ripe for a short squeeze due to the current warrant situation, due to the current lack of available shares. In exchange traded funds, in single stock ETFs, that you literally have to have 300% available margin for short positions. Welcome, Wolfie, my friend. I see you. I hear you. Welcome, Britt, Argos. Wolfie, if there's any chance you'd like to join me for the stream, I've got a few minutes, and I would. Let me see. Do I have a few minutes? Let me see. I actually don't, unfortunately. I have to go pick up my daughter from school here in about 2 minutes. So how about this? How about we ask our friend Wolfie and anybody else here from the retail investor community that wants to join us for a stream on Monday. I will do it earlier in the day so that more people can join. What's going on, OJ, J-Dog, Stockin, Anomaly, Sue Ray? Good to see you, ladies and gentlemen. We will do this together and get more of you up here through the Discord, in chat, voice chat, so that you guys can actually tell everyone how you feel about GameStop, about AMC, about BBBY, about Robinhood and Citadel and Virtue and Webull. Folks, I never intended or had any interest in starting another brokerage. Let's put it this way. I'm a former real estate broker. I own a freight brokerage. And I've now, in the process over the last 5 years, been working on Lit Exchange, a stock and crypto brokerage. I never wanted to open another company. I don't need more money. But when I saw how badly people were getting robbed during the GameStop and the AMC situation, ever since 2008, because keep in mind, I was a real estate broker in the late 2000s. So during when times were at the absolute worst, I was number one at my firm in downtown Chicago. When people were going from buying houses like it's going out of style to renting apartments like it's going out of style because they were going through bankruptcies and losing their homes and their investments and their pensions and their 401ks. I went through that. I didn't go through that specifically because I didn't lose any property in 2008, but I know so many people, personally know so many people that were losing their houses, living out of their cars, losing their investments, and whose pensions and 401ks and IRAs and thrift savings plans and ISAs went to shit. And those same people that had previously purchased with me were now renting apartments. Granted, some of them high-end luxury apartments, because I've been in every high-rise in Chicago, every single one. I have rented apartments, sold apartments, helped people buy homes and sell homes all throughout the greater Chicagoland area at the time, and was attunedly aware as to what was going on when 99% of the clientele switched from buying to selling. And at the time, I was not in a position to help people other than to help them find a place. And then through my freight brokerage, we do a lot of great work, but it's not exactly something that is able to help a large number of people. However, through stock and crypto brokerage, I know that by routing orders to lit markets, avoiding dark pools, preventing these shares and orders, your orders, from getting into the hands of wholesalers and market manipulators, we can literally prevent market manipulation. We can literally stop market manipulation to a great extent. What else would that do? Well, that would make it so that your favorite companies could not just become spoofed and shorted out of existence, like Toys R Us, like Radio Shack, like Circuit City, and so on and so on. So, folks, I've got to get going. But I will say we'll be back on Monday to cover what's going on with GameStop. Because as the Joker once said, here we go. Cheers, my friends. We're going to be filthy fucking rich.